Welcome to the deep dive. Today, we're really digging into Bitcoin as of June 2025. It feels like it's moving beyond just, the usual speculation.
It really does. Its identity is definitely solidifying.
You shared some great sources covering market dynamics, this huge wave of institutional adoption, and how regulations are shifting globally.
That's right.
So, our mission today, let's pull out the key insights, maybe some surprising bits, and help you get up to speed quickly.
Sounds good. It's fascinating how it's becoming part of the bigger financial picture.
Exactly. So you mentioned its identity is changing. Let's start with the market. Bitcoin's holding strong, around $106,000? Market cap over $2 trillion.
Yeah, $2.12 trillion, actually, putting it up there with major tech companies.
Wow. What's really driving this recent strength?
Well, there are three main things, I say. First, a pretty significant cooling off of geopolitical tensions. That U.S.-mediated ceasefire between Iran and Israel helped a lot.
Okay, that makes sense.
Second, there's growing buzz about the Federal Reserve potentially cutting rates. Lots of eyes are on that July FOMC meeting.
Right, the rate cut hopes.
And third, and this is huge, just constant, massive inflows into those U.S. spot Bitcoin ETFs. We're talking 10, maybe 11 straight days of positive flows.
And they've pulled in a lot of money, haven't they?
Over $49.9 billion accumulated in those ETFs. Just incredible demand.
Your sources mentioned the Fear and Greed Index shows greed around 65 or 66, but also this idea of cautious greed. What's that about?
Yeah, it's an interesting dynamic. You see very strong buying from institutions, actual Bitcoin, spot demand, but maybe less speculative frenzy in the derivatives markets.
So less gambling, more investing.
Sort of, yeah. Bitcoin's acting more like a global macro asset now. It's tracking closer to stocks, like the NASDAQ, rather than gold, which is a shift.
Interesting. And what about Ethereum? Your notes highlighted it's lagging quite a bit.
That's right. ETH is down nearly 27% this year, while Bitcoin's up over 13%. It seems like there's a reevaluation happening. Maybe concerns about ETH supply inflation or just less of a clear story for big institutional buyers right now.
Okay, so that institutional piece really seems key. You mentioned the ETFs. BlackRock's IBIT alone is managing what, $54 billion? That's staggering.
It really is. But it goes beyond the ETFs now.
How so?
We're seeing corporations actively adopt Bitcoin onto their balance sheets. Take ProCap Financial. They raised over $750 million, basically saying Bitcoin is the new hurdle rate.
The hurdle rate, so like the minimum return they expect.
Exactly. They're actively using their Bitcoin holdings to generate income, viewing it as a core treasury asset, not just holding it. That's a fundamental shift in corporate finance thinking.
And Green Minerals AS doing something similar?
Yes, planning a $1.2 million Bitcoin reserve specifically to hedge against fiat currency devaluation.
Wow. And it's not just companies anymore, right? Nation states, too.
That's the next layer. The U.S. actually formed a strategic Bitcoin reserves back in March. Similar conceptually to its gold reserves.
A strategic Bitcoin reserve. Okay.
And even U.S. states, like Texas, are passing laws to create their own state-level Bitcoin reserves.
So it's like this tiered adoption you mentioned, ETFs first, then corporations, now nations getting involved.
Precisely. It suggests this isn't just a short-term trend. It points to a really strong multi-year demand building up.
And all this demand is happening alongside, or maybe even because of, changes in regulation globally. Things seem to be getting clearer.
Definitely. Clarity is emerging. If you look at Indonesia, for example, oversight for crypto shifted from BPEPT to the OJK, the main financial services authority, back in January.
And the goal there?
The idea is same activity, same risk, same regulation, basically bringing crypto into the formal financial system, better protecting investors.
And in the U.S., there was talk of a shift.
Yes, a more pro-innovation stance seems to be taking hold. A big signal was the SEC revoking that accounting rule, SAB 121.
Ah, the one that made it hard for banks to hold crypto.
Exactly. Removing that barrier makes it much easier for traditional banks to offer crypto custody services, which is pretty significant for institutions.
And elsewhere in Asia, Japan's considering something big.
Potentially very big.
Yeah.
They're discussing reclassifying crypto as a financial product, maybe even this month. If that happens, it could open the door for Japanese Bitcoin ETFs.
And lower taxes, too, I read.
Yeah, a potential drop from a top rate of 55% on gains down to a flat 20%. That could unlock a lot of capital.
Okay, huge shifts on the regulatory side. Let's pivot quickly to the network itself. How's it holding up? Hash rate is strong.
Very strong, nearing 800 exahashes per second. And the U.S. is now dominant in mining, over 75% of the global share.
What about the holders?
Yeah.
The long-term folks?
Well, even with prices higher, the long-term holders are on balance, accumulating more than they're selling. Their coins are maturing, suggesting more are holding for the long haul, likely driven by these institutions coming in. It's creating a stickier supply.
Less Bitcoin readily available for sale, basically.
Right. And interestingly, transaction volume on the network itself has dropped to an 18-month low.
Why is that?
Mostly because the hype around things like ordinals and runes, those NFT-like protocols, seems to be fading. That clogged up the network for a while.
So lower fees for regular transactions now.
Generally, yes. Lower fees for just sending Gitcoin value. Looking ahead, though, the Lightning Network is growing fast public capacity, over $500 million now.
And new stuff coming there.
Big potential with stablecoins launching via Taproot assets. Lightning it could become a multi-asset settlement layer, not just for Bitcoin. And on the main Bitcoin layer, people are seriously discussing proposals like covenants, things like OPTAT or OPCTV.
Covenants. What would they enable?
They'd significantly boost Bitcoin's smart contract capabilities. Think more secure vaults, new ways to scale the network, stuff like that. Still under discussion, but promising.
Okay, so wrapping this all up, what's the main takeaway for you, the listener, from all this?
I think Bitcoin in mid-2025 is really defined by this convergence. You have massive new institutional demand hitting a supply that's getting tighter, all happening as global regulations become clearer. It's really cementing Bitcoin as a global macro asset.
Yeah, it feels like while we'll still see that short-term price bouncing around, tied to ETF flows or what the Fed does, the longer-term picture looks structurally quite bullish.
Agreed. That tiered adoption ETFs, corporations, nations, creates this demand dynamic we haven't really seen before, stretching out over years potentially.
So for listeners, say, in Indonesia, what should they keep in mind?
Definitely prioritize using exchanges licensed by the OJK. You might see fewer assets listed initially as things formalize, but that comes with much better protection. And maybe think about Bitcoin not just as speculation, but as something that could potentially enhance returns in a diversified portfolio. Keep an eye on U.S. economic data and global politics, too, as Bitcoin is clearly tied into that now.
Right. And maybe one final thought to leave you with. We're seeing these more speculative protocols fade a bit on Bitcoin. The network's kind of returning to its core use for value transfer, but also getting these new capabilities like multi-asset lightning. Is this Bitcoin finally growing up, shedding that purely speculative label and becoming the global financial infrastructure some always thought it could be? Something to think about?